Assalamualaikum warahmatullahi wabarakatuh to Dr. Mazurina and all my classmates. We are from Group 5 will present on the integrated reporting. Before we go further, I would like to introduce our group members. Our group members consist of me, Najwa Farhana, Nur Fatiha, Nur Nadia and Nurul Nadia.
The relationship between a business, its investors, and society is under scrutiny like never before. Businesses are trapped in reporting cycles that are short-term in focus, are backward-looking, have a compliance box-ticking mentality, and a fragmented approach, meaning reports are getting too long and too complex without telling a holistic story. As a result, businesses are facing significant compliance burden. Investors are not getting the right information they need. Capital markets are suffering from short-termism and an excessive focus on financial information, and in certain aspects, a lack of trust. There is a better way, based on stronger dialogue between businesses and investors. This new approach is already practiced by thousands of businesses globally.
Now, I will explain what integrated reporting is. Because of the growth of information technology and the globalization of economies, the environment in which accountants operate is fast changing. For years, organizations have held back by short-term markets, a lack of long-term thinking, and a lack of data on the underlying drivers of long-term value creation in a firm, such as innovation, brand equity, customer loyalty, and critical stakeholder connections. Integrated reporting is a tool that may help firms identify, manage, and communicate about the sources of value creation. Integrated reporting, according to the International Integrated Reporting Council, IIRC, is an evolution of corporate reporting that emphasizes conciseness, strategic relevance, and future direction. Integrated reporting is gaining momentum across the world, and it has the potential to bring about transformational changes in the roles of accounting professionals and in the standing of the profession itself. This sort of next-generation approach to business thinking, management and reporting depend on broader information sets and quicker, more sophisticated ways of analyzing the material information required for decision-making. IIRC also stated that integrated reporting is a process founded on integrated thinking that results in a periodic integrated report by an organization about value creation over time and related communications regarding aspects of value creations. As a result, generating a single integrated report, which is also known as a one report, remove the uncertainty of reporting both financial and non-financial data clearly and straightforwardly. Integrated reporting also adds value to a company by highlighting how environmental and ethical values drive long-term growth. While the accounting role was limited to providing financial information and analysis, in today's market, non-financial data is becoming increasingly important to the investors when assessing a firm. As a result, firms must report not only on profit, but also on their influence on the economy, society, and environment. Integrated reporting is useful in this situation because it provides a dashboard of an organization's operations and performance within this larger information flow. Next, I will pass to Nurul Nadia.
Hello everyone, I am Nurul Nadia. Now I will continue with the justification of the emergence of integrated reporting. So, why adopting integrated reporting? Based on the article, we can see that the emergence of this new change of integrated reporting in Mauritius has gained traction because it is believed that integrated reporting has the potential of sustainable development for companies in Mauritius and has the ability to improve the current corporate reporting. This can help most of the companies to be able to move forward to the sustainable development since an integrated reporting has evolved to respond to the need for a new reporting framework that reflects the rapidly changing business environment. Besides, integrated reporting is an important tool to improve the understanding of the relationship between financial and non-financial factors that determine a company's performance and how a company creates sustainable value in the longer term. Next, integrated reporting emerged involving movement of corporate reporting back on 1960s, recognizing both the impact of societal issues on corporate activities and performance and the information needs of broad range of stakeholders. This movement stimulated the inclusion of environmental, social, and governance information in corporate publications. It evolved from the limited disclosure of environmental elements to a broader coverage of societal and environmental issues. Disclosure also became more structured with the development of voluntary reporting frameworks that offer guidance to companies on the matter. As a result, disclosure on social, environmental, and governance issues now turns to reporting on material aspects of corporate impacts and activities. Among this shift toward materiality, integrated reporting aims to fulfill information needs for concise and material information about the multifaceted nature of corporate activities and the process through which it creates value over the long term. The lack of coherence, transparency, and accountability in traditional financial reporting led the International Integrated Reporting Council (IIRC) to develop integrated reporting in 2010. Their mission is to establish recognition and acceptance of integrated reporting and integrated thinking. Second, the IIRC disseminates and promotes standardized integrated reporting, thereby contributing to the use of IR as a potential reporting standard in both the public and private sectors. As for the development of integrated reporting, IR has been developed to be consistent with several corporate reporting trends taking place across the globe. A range of market drivers are currently not being satisfied by complex and dated reporting methods. These include opportunities afforded by new technology and the need for transparency, inclusiveness, and more information that is material to modern business. The company are working to align capital allocation and corporate behavior to wider goals of financial stability and sustainable development through the cycle of integrated reporting and thinking. To facilitate this vision, the International Integrated Reporting Framework has been created. It includes principle-based guidance and content elements to govern and explain the information within an integrated report. In addition, integrated reporting has been created to enhance accountability, stewardship, and trust, as well as to harness the information flow and transparency of business that technology has brought to the modern world. Providing investors with the information they need to make more effective capital allocation decisions will facilitate better long-term investment returns. As for the background of integrated reporting in Malaysia, before integrated reporting is being introduced, Malaysian companies focus more on historical performance in their annual reports. The critics arise as traditional reporting is past-oriented, delay in reports issuance, and lack of information regarding risks. In addition, stakeholders encounter difficulties in looking for the most relevant information from traditional reports. Therefore, a company's financial report is often being questioned for its truth and fairness as it does not include information regarding non-financial performance which is able to determine a company's long-term financial background, stress that information provided in the traditional annual report does not give a holistic picture and understanding of a company's business activities. Hence, it is not relevant enough to aid in decision-making. The implementation of integrated reporting, relatively a new reporting system in Malaysia. Adoption of integrated reporting standard remains on a voluntary basis. Despite its voluntary nature, there is an increasing number of companies incorporating integrated reporting standards. To a certain degree, integrated reporting provides significant benefits for companies and may improve the company's performance in the long run. Due to the perceived benefits, integrated reporting is gaining worldwide acceptance and research interest is growing. Next, how integrated reporting emerged. As mentioned in this article, integrated reporting is a modern solution that allows to eliminate existing weaknesses in the organization's traditional reporting. It is aimed at communication with a wide range of stakeholders as it gives a dashboard of an organization's activities and performance in this broader information flow. Integrated reporting is beneficial to the most of companies since it addresses to all stakeholders, both internal and external, instead of being focused mainly on large entities, investors, and shareholders like the traditional reporting does. In order to unify the concept of integrated reporting, the International Integrated Reporting Council has developed the International Integrated Reporting Framework with the objectives to establish guiding principles and concepts that govern the overall content of an integrated in which the report should be concise, reliable, and complete, including all material matters, both positive and negative, in a balanced way and without material error. The IIRC has set out a principle-based framework rather than specifying a detailed disclosures and measurement standard. Basically, how regulators in Malaysia promotes integrated reporting. Integrated reporting is currently gaining momentum and replacing the conventional corporate reporting in Malaysia. The Malaysian Institute of Accountants (MIA) is actively promoting the benefits of integrated reporting to companies and investors. One of the areas that MIA focus is to strengthen corporate reporting and enhance its role in driving orderly and transparent markets. In 2017, Securities Commission, through its latest Malaysian Code of Corporate Governance, also urged large companies to incorporate integrated reporting in the preparation of annual reports. Integrated reporting acts as an essential principle for 21st century corporate governance as regulators seek to promote effective communication between businesses and investors, focus on strategic goals in order to create long-term value. Lastly, Bursa Malaysia also takes initiatives in promoting integrated reporting as it requires companies to disclose a narrative statement of their economic, environmental and social risks and opportunities in their annual reports and focus more on materiality, governance and management aspects of organizations. That's all from me. Next, I will pass to the next presenter, Nur Fatiha.
Thank you, Nadia, for your great presentation. As we know, due to development of integrated reporting in the accounting profession, it has brought several challenges on this IR implementation or adoption, which has been stated in this article. The first biggest challenge in adopting integrated reporting is apprehension about disclosing market and price-sensitive information. Adoption of integrated reporting may have a negative impact on the performance of the company. According to the article, the majority of respondents fear that this integrated reporting will provide more balanced and efficient reporting to all stakeholders. However, they are concerned that the information disclosed in the report will be unbalanced and effective, which particularly when it comes to sensitive information. They may be afraid to disclose market or price-sensitive information because they do not know the outcome of the impact on the integrated reporting, because these actions may affect their company's performance as well as the shareholder value. Second, there is a lack of a proper information system to generate integrated reporting. Inadequate information system to produce the integrated reporting can also be considered as a barrier to IR implementation. With a broad range of information required by stakeholders nowadays, companies must cover and comply with the information within the stakeholders' requirement, which that's in up-to-date system so that reliable reports can be generated. It is also worth noting that IR is a new concept and method for the company to adopt. So, it may take some time to evolve the company's information system to support the shift to integrated thinking. As a result, the lack of a proper information system will be a significant disadvantage to the company because it will take more time to cover all the information required to produce an efficient IR or recover from the error that occurred during the adoption. The third challenge in adopting integrated reporting is the cost of preparation. According to the article, some respondents are clearly skeptical that the benefits of IR will outweigh the cost. They also believe that implementing IR will raise the cost of doing business. It is because preparing an integrated report necessitates the collection and analysis of both structured and unstructured data, infrastructure investment in new information system and data sets, establishment of new process and control system, devoting of resource and the obtaining of third-party assurance. This has revealed that the cost of new information system account for the lion's share of all costs associated with integrated reporting. It is due to the fact that companies embarking on the integrated reporting journey must invest in the development of information system for sustainability data. Companies also require capital to hire skilled experts to interpret this data and incorporate it into their financial reporting. Next challenging part in IR adoption is a lack of understanding and guidance. The lack of understanding is for the purpose on the requirements and expectation of the stakeholders, and the little guidance to preparers of integrated reports on how to employ the 6 types of capital into the explanations that meet the requirements of stakeholders. This factor focus on the effectiveness of the guidance or procedures used to generate efficient integrated reporting. It is a challenging task to tie up factors, financial and non-financial data into business strategies and how an organization creates value in a concise report. Indeed, it is uncertain to many parties on how to describe companies' activities in its entirety to understanding of investors and stakeholders, which will help to improve the company in the medium and long term. Furthermore, IR is not yet mandatory in a country like Malaysia. Thus, corporations usually engage with it on a voluntary basis. Besides, the choice for corporation on what information they want to disclose leads to the potential of misuse of platform, and this contributes to the delay in the understanding of integrated reporting. A lack of support from the board and senior management is also a barrier in IR adoption. Even if this is a minor challenge, board commitment and backing are essential for any major initiative within an organization, and integrated reporting is no exception within this matter. It was also linked to upper level in IR guidance to aid in a better understanding of the key function and outcome of this integrated reporting towards the company. A lack of support can manifest itself in a variety of ways. Some may cause difficulties in accessing the IR from the upper level, while others may cause error or mismanagement in using the IR due to misunderstanding of boards and senior management's requirement. Another barrier to IR implementation is the requirement for a robust system and technology to support the integrated thinking approach in all organizational layers in order to feed the information for integrated reporting. These forward-thinking and prospective financial and non-financial plans must be supported and greatly enhanced by modern technologies and new media, such as big data analytics and social media applications. Furthermore, the concise report of integrated reporting must be available in electronic form that users can easily access. Many parties believe that integrated reporting is a catalyst for improving corporate reporting. However, it is unclear whether integrated reporting is actually driving organizational change. And last but not least is the risk of litigation due to the uncertain outcomes of forward-looking information that may be included in integrated reporting. It should be noted that the International Integrated Reporting Framework is based on principle rather than specific content. Companies must use their discretion to determine what information is considered material and should be included to provide readers with a better understanding of their value creation potential. I think that's all from me. I will pass to the next presenter, Nur Fatihah.
Thank you, Nadia, for the great explanation on challenges in integrated reporting. Hi everyone, my name is Nur Fatihah and I will continue the presentation on benefits of integrated reporting. Integrated reporting enhances the way organizations think, plan, and report the story of their business. As we know, integrated reporting is a way to achieve a more coherent corporate reporting system, fulfilling a need for a single report that provides a fuller picture of organization's ability to create value over time. It can also be applied in a proportionate and scalable manner to all organizations regardless of size and sector. There are some advantages of integrated reporting that I would like to explain in this topic, which has been highlighted in the research article. First of all, integrated reporting can benefit in improving transparency and governance. Understanding how different aspects of a company interact, influence one another, and affect overall performance is important to achieve maximum efficiency. Intelligent reporting technologies can reveal not only efficiencies and cost drains, but also great performance by improving the flow of information between operating systems. This allows management to focus resources that most required and to replicate successful models in other parts of the company. SME may also increase trust in the data they provide by being open about where they are now in terms of how they assess, manage, and disclose performance. SME can learn how far they have progressed in measuring various aspects of their performance and communicate to their professional accountant and business advisor about how an assessment and subsequent intervention can help plug in-house competence gaps in non-financial data preparation and communication to internal and external audience. Secondly, integrated reporting benefits in improving communication with external stakeholders. Organizations of all sizes can apply to improve communication and trust in their operations. As a business owner or manager, they must earn the trust of their customers, suppliers, finance providers, and other external stakeholders. By clearly presenting what produces value, trust in the business is built. This is becoming more relevant as government agencies and non-profit organizations look for commercial partners who not only provide the goods and services they require, but also do it in a sustainable manner. Next advantages of integrated reporting is promoting integrated thinking. Understanding value creation is achieved by what is known as integrated thinking, which is centered on breaking down internal boundaries between people and departments so that the organization as a whole can better understand the business key elements. In the context of trends and concerns influencing the business, this includes governance, strategy, business model, and opportunities and risks. Integrated thinking also requires an organization to evaluate the various resources it consumes as well as the relationships it relies on, putting it in a better position to make decisions that will assure its long-term sustainability and resilience. It is a great strategy to assist a small business better understand and manage how it creates value, as well as report on it. More integrated data and thinking should help the company make better decisions about the key factors that influence its ability to produce value, which can then be presented through an integrated report that provides a compelling business case to lenders and other stakeholders. The process of providing value and telling stories is referred to as integrated reporting. Next advantage of integrated reporting is better managing capital and improving efficiency. Through integrated thinking, it can help SME build a better, more concrete understanding of the factors that determine its ability to create value over the short, medium, and long term. It enhances the SME's business planning and development by taking a fully connected, holistic view, including its use of and effect on all capitals or resources that are important to its business model and future. Integrated reporting uses the term capitals and a multi-capital model to recognize the fact that value is not stored in financial capital alone, but in all sorts of capitals. Just like the financial capital, when these other capitals are properly understood and managed, they can continue to release value over time, while simultaneously growing in their capacity to continue to drive value in the future. Integrated reporting identifies these other capitals as manufactured, intellectual, human, social and relationship, and natural capital. Financial capital is the equity, debts, and grants available to an SME to be used in the provision of goods or services. Manufactured capital is the tangible goods and infrastructure that SME owns, lease, or has access to that are used in the provision of goods or services. Intellectual capital is the knowledge, intellectual property, systems, and process that SME has at its disposal that provide it with a competitive advantage and positively affect its future earning potential. Human capital is the skills, experience, and motivation that employees and management in an SME possess that provide the foundation for future development and growth. Social and relationship capital is SME's brands and reputation, including its relationships with the community in which it operates, its customers and business partners and others in its value chain, such as various government agencies. Natural capital is SME's access to environmental resources that it can use to provide a return and that it affects through its activities or the goods and services it creates. Through the perspective of the business model, integrated reporting requires fully analyzing the multiple consequences of connection between capitals, the external environment, and also internal elements. Integrated reporting relies heavily on the business model. An increasing number of organizations are developing innovative ways to integrate information about their business model into a management report, as it can be a key element of investors' analysis and understanding of a company. Last advantage of integrated reporting is improving the current corporate reporting. Management reports are essential business tools, but traditional reporting methods often fall short. They are time-consuming to produce, present static data rather than live data, and take staff away from more productive revenue-focused tasks. Employees may provide up-to-the-minute reports that show entire performance, not just specific business divisions, using digitally integrated systems, allowing management to make educated strategic decisions. It can be really frustrating to see highly skilled employees sit for hours creating charts or reports in order to have them ready for the next management meeting. These mundane jobs are a waste of time that could be better spent on things that offer value. That's all from me. Thank you.
Now, I will explain some suggestions to help solve the issue. First is the implementation of integrated reporting technology. ICT tools and techniques, which is a system or software that companies are using or will be using shortly to meet the integrated reporting standards. Some of the reporting tools utilized are SBRL, Oracle, SAS Business Intelligence, and Cognos reporting. Second is employee training. Appropriate training is important to ensure the employee can understand and deal with the integrated reporting concept and related technology. Based on the research, they question if they have received appropriate training in order to deal with the integrated reporting concept and related technology. and out of the 70 people who replied, 58 said no and 12 said yes. The organizations that said no agree that their staff is not given adequate training and are unprepared to deal with the integrated reporting idea. Since integrated reporting is gaining popularity throughout the world, it is critical for all accounting personnel to have proper knowledge and abilities in integrated reporting. While out of the companies that said yes, they said their employees were given integrated reporting training on the job. Professional qualifications institutes provided 25% of the training, while service provider consultants provided 8% of the training. This group is made up of employees who work for organizations that have recently deployed integrated reporting software and have received trainings from consultants and software developers. Third is relevant skills perceived by employers of accounting practitioners. Knowledge and skills are important for accounting practitioners should have. Employer expectations have altered since the advent of ICT and the acceptance of integrated reporting compared to how they were a few years ago. This is due to the fact that they have acknowledged that accountants' duties have evolved. As a result, there are questions regarding what qualities and expertise employers seek when hiring accounting and financial professionals for their companies. The majority of the organizations rank ICT skills, reporting knowledge and abilities as the most vital, and some said that general skills were the most necessary for future accountants to have. The first one is ICT skills. ICT abilities are one of the fastest growing skill sets today, and they are in high demand in a variety of industries. ICT has pervaded many work responsibilities, expanding from a specialized to a basic demand across several industries. Most of the companies emphasize the need for ICT skills for accounting staff to be successful in their jobs. To transition to an ICT-intensive work environment, they need to be technologically adaptable. They should have a fundamental understanding of accounting software, Oracle, database, and the Microsoft package. Furthermore, reporting abilities and understanding of cloud accounting will be advantageous. When engaging with new software, they will be able to swiftly change to speed. ICT skills are important to the profession, not just the use of tools and software, but also the use of reporting technologies. Big data, for example, has grown increasingly crucial for the profession since the advent of ICT, even as new forms of data have become available. Second is reporting knowledge and skills. Other than ICT plays an important role in the accounting profession, and it greatly aids in reporting and data manipulation in information systems. However, regardless of ICT advance, there is a clear need for reporting knowledge and abilities. Most companies put a high value on reporting knowledge and abilities, implying that accountants should utilize their reporting skills to assess data statistically, even if it is created by systems. Third is generic skills. Rather than ICT, accountants' mindset also must change in order to cope with the notion of integrated reporting. This indicates that there is a demand for people with general abilities in order to succeed in the accounting field. Generic talents are high-level abilities that apply to a wide range of tasks. Communications, problem-solving, patience, adaptability, tenacity, resilience, boldness, and creativity are among the talents that are most sought. They are crucial in today's world since jobs and life are in constant motion. Both are becoming increasingly complicated. Both jobs and life need adaptability, initiative, creativity, emotional mastery, and the capacity to multitask.
Integrated reporting. It builds on what we have instead of trying to create something new. And evidence from world-leading academics shows it contributes towards financial stability and sustainable development. So, what exactly is integrated reporting? Integrated reporting is a strategic and future-oriented communication about how organizations draw on the different resources and relationships available to them, the capitals, to create value over time. The International Integrated Reporting Framework identifies 6 broad categories of capitals used by organizations: financial, manufactured, intellectual, human, social and relationship, and natural. Integrated reporting helps organizations think holistically about their strategy and plans in the context of the business impact on the different capitals, making better informed decisions and managing key risks, taking advantage of key opportunities. What would the world look like if more organizations go on the integrated reporting journey? More effective resource allocation, an end to incentive systems that perpetuate short-term thinking and decision-making, reporting aligned to modern-day business models, investors able to understand a company and its prospects better so they can manage investment risk, validate decisions, and assess a company's forward-looking information. A system of capital allocation that's better aligned to the long-term goals of business and society, building trust. Value created, value enhanced.